Hello and welcome to the Gold, Ghosts, and Guns podcast for September 3rd, 2024. My name is Tom Luongo. We have a lot to talk about. It's episode 192, and I have the great pleasure of having with me today Bob Murphy, who I've known Bob's work since, going back since I started first visiting the Mises Institute. I do believe that Bob was a graduate student back then, and so I've been reading and listening to Bob for probably close to 20 years now. So this is a great pleasure for me because we met previously the first time about a couple of weeks ago when we recorded for the Expat Money Summit that's coming up. And now I just said, hey, let's do a home and home, on his podcast and mine. So I've invited Bob on, and I think we're going to talk about inflation and a variety of other things. But before I get to that, I've got a couple of things I need to deal with housekeeping wise. So I'll be speaking again this year at the Expat Money Show put on by Mikkel Thorup, who I had the great pleasure of meeting when I was up in Edmonton earlier this year for Sean Newman's Cornerstone Forum. The event that he's putting on will be from October 7th through the 11th. It's one of the biggest expat convocations in the world. Now, this is a free event, and personally, I'll be speaking there twice, once by myself and once as a part of a panel with Alex Craner and Bob Murphy. So there will be people there like Ron Paul, Doug Casey, Scott Horton, Tom Woods is going to be there. So is Mark Faber. This should be an excellent show, and it should help you learn everything you need to know about crafting a potential plan B, and that's if you need one. Or if you're just looking for a way to preserve some of your liberty and or your wealth at a time as uncertain as this period in history, well, then this could be the show for you as well. This includes things like getting a second passport or preserving your offshore finances. It could just be that you want to invest in some international real estate. The folks that are there will be able to help you with all of that. So if you want to sign up and reserve your complimentary ticket, head over to expatmoneysummit.com and you can sign up there. We have a promo code and the link will be in the show notes for this podcast. So I'm going to bring Bob on now and we're going to chat about the state of the world, like two old Austrians just kind of like getting down and doing the thing. So Bob, how are you? How you been? And what's on your mind?
Hey, Tom, thanks for having me on. And it was a pleasure. I have known of your work for a while as well. And I think you and I are going to be at a Mises event in the not too distant future as well, that we'll see each other in person and verify that we're not each federal agents. Yeah. The joke works better if it's like a pretty girl online that has surprisingly Austrian views. But in this case, still, I'm not afraid to recycle a joke. So, yeah, I guess the big thing for me in terms of, my areas that I've been working on and might be of relevance to your audience is just, the U.S. macroeconomic situation, Federal Reserve. So for a while, I was pointing to the inverted yield curve as a signal. And it wasn't just like, I just follow charts. And, I was tying it into standard Austrian business cycle theory to say, hey, the story that Mises told is the banking system, they flood the market with cheap credit that causes an unsustainable boom. Then they start to panic, they tighten, and then there's a crash. And so I said, okay, if you think about what would the yield curve look like through those stages, it's certainly you get the, upward sloping yield curve because the idea being the central bank has more influence over short rates than long rates. And so if you just grant me that, which is not a controversial claim, then it fits in, right? When they're pumping money in and, pushing down interest rates, it would really be short rates that they would be pushing down. And long rates might even go up as people expect, more long-term price inflation. Right. And so you'd have an upward sloping, quote, normal yield curve that would go hand in hand with the unsustainable boom in an Austrian framework. And then once, people panic, they tighten, then that would cause short rates to spike. And I actually saw that kind of distinguishes my explanation of the yield curve's track record from like Paul Krugman. If you go read him, writing in his New York Times articles, at least, the way he explains that pattern of why is it that an inverted yield curve tends to go hand in hand with an impending recession is he makes it all about expectations that, the market, people know a recession's coming, so they predict future rate cuts. And that's why, longer rates or, midterm to longer rates on the curve fall below the current short rate. But there's the big problem with that is that doesn't fit the data. If you look at the actual data, when the yield curve inverts, it's typically because the short rate zooms above the long rate, not because the long rate collapses. And so, that just doesn't work. But more generally, his story is kind of like arguing in a circle. It's not saying, the reason the yield curve gives us information about a recession is because we all know a recession's coming. You know what I mean? So that's kind of a weird circular argument. So anyway,
well,
because of that,
it's Paul Krugman. So weird circular arguments are pretty much
it's his bread and butter, right? That's on brand for him. Yeah. So anyway, big picture. So for a while I have been warning that, but this particular inversion has lasted a lot longer than most of the prior ones, at least going back, to the 60s. And so for a while, people were like saying, oh yeah, you right wing, people, you just don't like Biden and blah, blah, blah. But now with, more of the data coming in and the revision about, oh, maybe there weren't so many jobs after all. It does seem like, okay, yes, I think what's going to end up happening is years from now, looking back, yet again, the inverted yield curve will, quote, still have a good track record. And they'll just say about this episode, wow, that was a particularly long inversion before it flipped back. But I also think it's going to say, yep, and that's why the impending recession that we're in store for right now is going to be particularly nasty, because I think that, fits the pattern as well, that the longer and deeper the inversion, the worse the subsequent recession tends to be.
No, I think I'm with you on that one as well. And I think that, what I've been saying for a long time now, and this kind of breaks not fully with, Austrian doctrinaire Austrianism, other than to say that, well, if we look at things from the Federal Reserve's perspective, right, and I'm going to bring in what I've been saying about Jerome Powell for the last couple of years, which is that after they spend all this money with the CARES Act and post-COVID and everything else, and all the insane spending in Washington, Powell had to go way above where the market, wanted to go in order to try and start wringing out the incipient inflation, because he knew it was bad, and it was bad, and it's terrible, and it's still bad despite the CPI. But I think this is a bigger thing in play here, which is that we have to reset. I'll actually give a nod to Krugman here, that we have to reset expectations of the market, which is that the Fed's not coming to everybody's rescue at the drop of a hat, because, oh my God, stocks were off 3% last week, so now it's time to cut interest rates. That there's a bigger game afoot here, because it really is the size and shape after 15 years of zero bound money that create, or 12 years of zero bound money, whatever the final number is, that leverage in the offshore dollar markets, in the shadow banking system offshore, that's what has to be wrung out of the system. And that's going to take a lot longer than any one business cycle, and two, had to be an extreme move on his part in order to get everybody's attention. I don't know what you think about any of that. You and I really haven't talked about that, but I know this is what I've been screaming, like, banging my shoe on, the table like Khrushchev about for 3 years now. It's the only thing that makes any sense as to why Powell did what he did, and for as long as he's done.
Yeah. So let me say this. I think what I'm saying is consistent with what you're saying, that I've noticed, I've been, mildly chastising some of the people, quote, on my team, like online Austrian libertarian types who just say, oh, money printer go burr. I'm saying, guys, no, the Fed, they jacked up interest rates a lot higher than a lot of even, the people saying, hey, we need to worry about inflation. Like, they were pretty hawkish. And then also look at the Fed's balance sheet. I mean, it really has been, look at M2. M2 came down for a bit. Like, normally it's just the growth of M2 slows when there's a tightening period, whereas here it literally came down. Now, in fairness, it's because M2 shot up so much during COVID that, but my point being that as far as, besides Jerome Powell just saying, and the Fed and resigning, like what he did for a period there is kind of like, what more could you want the guy to do realistically, given what his constraints were institutionally, politically, and so on, to try to say, yeah, there was very expansionary policy under my predecessors, and I'm trying to, return this to normalcy and kind of reassure the bond markets around the world that, we haven't given up on the dollar. We want this thing to be here for the long haul, and, so forth. So.
Yeah, and the thing is that, and I agree, that's consistent with my view, and I'm glad, when you and I spoke, for the first time, I was actually a little worried about how this was going to go, because I do follow your work, but at the same time, like, I don't know where everybody's head really is on these things, and I knew that I was going out into an area where I took a lot of criticism. And I'm okay with that. I don't care. It doesn't matter. You follow the truth wherever it goes, and you follow what you think is the truth, and then you play the scenario out as best you can. So it was fun when I started listening to you talk. I'm like, oh, Bob gets it. Like, Bob gets, I think, what I'm talking about here. So even if there's areas of disagreement, which is fine, I have no problem with that whatsoever, and I love getting some pushback on this. The basic framework of the Fed, in common parlance, trying to get rid of the put, is a really important concept that I think has taken a long time for bond traders, stock traders, everybody, investors in general, just to wrap their head around, because they've got 40 years worth of the Fed bailing them out at every moment's notice. And I think, and so this is, I think, the hardest part for everybody to, wrap their head around. So what if, the Fed's just acting in their own best interest? And is that such a terrible thing that sometimes our interests and the Fed's interests kind of align for a couple of years? Is that not, is that so untoward? Is that so crazy to think that the Fed would, I don't know, try and defend itself against extinction?
Yeah, I mean, if for no other reason that you're in charge of this printing press and you issue, right now the globe's reserve currency, but again, that status is eroding as we speak.
Sure.
And that's just not ideological talk. That there's clear data showing that, any kind of metric you want to use. And so just from their own narrow perspective, they're not crazy. Like, they would have to. Well, maybe they are crazy. They're not stupid, to put it that way. Right. Maybe they are crazy, depending on your definition. But they would know we can't just let everyone think, like you say, anytime that the market turns down, that we're just going to turn on the monetary spigots again. If that becomes generally accepted knowledge, then it's game over, right? Like, it can't be that everyone just knows they're going to keep doing that. They're head of, just like that's why, they tried Bernanke out in 60 Minutes when the rounds of QE started, and he reassured everybody, oh no, if inflation gets out of the bottle, we'll just turn it off like that, and letting everybody know this is just a temporary thing, and we're going to suck those reserves and the Fed's balance sheet. I mean, he ended up being wrong, right? That the Fed's balance sheet right now is way higher than he led people to believe it would have been when he was doing those interviews. But still, that I think he needed to lie, or at least to be grossly optimistic, to reassure people, because if they just thought they're just going to print money, that's their strategy. If it's like full MMT, then the dollar crashes, and that's not in the Fed's interest either.
No, it really isn't. But at the same time, I absolutely lump Bernanke and Yellen both into what effectively is a globalist camp, that they were actually destroying the dollar. They were actually destroying the Fed's credibility, what credibility the Fed had after Greenspan. But I think they were doing it. Certainly Janet Yellen. Bernanke you could make an argument, having listened to people's opinions on him who knew him or know him, that he just got scared and didn't know what else to do. But that's one version of it. Janet Yellen's a freaking vandal. And when when you use the term labor economist, what you're saying is, oh, you're a communist. I got it. This is not difficult. And Janet Yellen has, as Treasury Secretary, she's acted exactly the way she did when she was the Federal Reserve Chair. Like, she's constantly trying to pump money into the system as much as humanly possible, undermining literally the work of the Federal Reserve Chair, who's trying to pull back on and I think successfully pull back on monetary policy and M2 and credit growth and all the rest of it. And there she is. She's out there issuing 60-day bills to actually make it even worse and to tighten the supply of the long end of the curve, and doing yield curve control. She's been explicitly doing yield curve control for over 2 years, Bob. And it's even worse since, I think, was it November of last year, when she came out and said, I'm going to start buying 20 years. Like, until that day. And that's and the day she started doing that was the day that the last rise of the peak in the long end of the yield curve. Everything turned over the next day, and the whole market started front running her. And that's why, and we've had a 100 basis point drop, 90 basis point drop in the US 10-year in less than a year. Right.
Yeah.
And now we have so go ahead.
Right. Yeah. So I was right. I agree with you that at the time, I think we got into this a little bit in the last time you and I were on that panel discussion, when Greenspan was doing all those rounds of QE, and I was looking at one theory I entertained was, yes, is this part of, like, do they want Americans to get on the Amero, and they know no American's going to, no red-blooded American's going to do that if the dollar is still strong. So are they purposely trying to crash the dollar because that's the only way to get them onto a more global currency? That was my theory, like the best thing I could come up with, looking at what Bernanke was doing.
Right.
Because it looked like he on purpose was trying to crash the dollar.
Yeah,
So,
no,
yeah.
Yeah. Sometimes, like, is it incompetence? And we as libertarians tend to go with the government is more incompetent than they are malicious, and I'm like, yeah, okay. So most of the time that is true because just the bureaucracy in general is generally incompetent, and but and a guy like Bernanke whose background is nothing but egg-headed ivory tower academic would make sense that he has no real world experience in actually ever trading a bond or managing anybody's money or anything like that. So the making the incompetence argument makes sense for him. Yellen, on the other hand, going all the way back, and I remember listening to Danielle DiMartino's Booth's book Fed Up, and her portrait of Janet Yellen is particularly damning. At her time when she was the head of the San Francisco Fed and whatnot. And then since then, and remember, Daniel wrote that book, nearly 10 years ago now. So this was before Powell became Federal Reserve Chair. Yellen was still in charge of the Fed at that point. So it wasn't like she was talking, Powell's book on his behalf or anything like, you know what I mean?
Right.
Her portrait of those three figures is at least a good starting point to understand the three of them. Powell was always against QE. He was always against the 2% inflation target. Yellen was always a labor economist and a commie. And Bernanke was, portrayed himself as kind of an egghead academic, but really was quite ruthless in how he ran the Fed. So
one interesting thing on Bernanke was that he was an academic economist, and part of how it fit was because he had written a lot on, the Great Depression and how the banking system transmission mechanism, and all that stuff. But what was funny is that I remember there were guys, I don't know if like this guy Scott Sumner's on your radar, but he's big on NGDP targeting and stuff like that. And so they were very much anti-conspiratorial, like, you Austrians are a bunch of nut jobs, that kind of stuff. These are just scientists doing the best they can in a tough job, that kind of thing. And when Bernanke started paying the interest on reserves, these guys were flummoxed. And they're like, what? But Bernanke's own academic research shows, if you read about what he wrote about the Bank of Japan in the late 90s, he shouldn't be doing why. And I just thought it was hilarious that, you have an academic writing on stuff when he's in academia, then you put him in charge and he starts printing up money and giving it to bankers when he's the head of the Fed. And you're like, why would he not follow his own academic work? I can't, anyway, it just, to me, it was just hilarious. Like, that's just, you know what I mean? Like there was this mystery to them. Like, why would you do that?
Why? And it's funny you bring up interest on excess reserves, right? I remember during the financial crisis when I did not really understand this stuff very well. So I was still very much, I still do consider myself very much a student of this stuff. And I'm only just now really understanding, getting at least what I would consider a good handle on this stuff. Back then, I remember reading Dr. Gary North over at Lou Rockwell, who covered probably that whole period of time better than everybody else. Because one, he predicted everything what was going to happen. He said, Bernanke is going to do X, Y, and Z. This is what's going to happen. And he was right. And he targeted interest on excess reserves, IOER, as the mechanism by which you're not going to see any of this money that's been printed transmit into the economy. Because if he wanted the money to flow, he wouldn't be paying the banks to hold on to it.
Right.
And so I remember when I first got hired at Newsmax in 2013, I was going to conferences, I was doing some stuff, and we would sit there and we listened to the normal kind of gold crowd, and the Mark Skousens and others all talking about, I don't understand why there's no inflation. And I was there sitting next to a friend of mine, and it was on a cocktail napkin, literally as they were all doing their standard thing. And I just wrote IOER and passed it to her on a cocktail napkin and went, that. And once you saw it, you couldn't unsee it. And so, this stuff's very important thing.
On that was a good laugh line well, maybe it wasn't a laugh line, but more when I would be given talks, because right after the financial crisis hit and everything, that, my phone proverbially was ringing off the hook, and I was going around giving talks to people, just showing like what happened with the housing bubble and look at Fed policy, blah, blah, blah. Mm-hmm. And then a thing that I would tell them is, now, folks, they're telling you, oh, it really pains us. We hate to bail out all these irresponsible bankers and whatever that made these dumb mortgages loans and packaged them up and everything. But we have to, and their catchphrase was, we have to bail out Wall Street to rescue Main Street, right? So the idea being, we can't let the banking system collapse. And I said, what's funny, though, is right in October of 2008, they instituted a new policy whereby the Fed paid banks to not make loans to their customers. So isn't that kind of weird that they would do that right when they're bailing them out to keep credit flowing? And, you know, and people were kind of, now, you know, of course, that's not how the Fed described the policy on its website, but there's nothing false in what I just said. They were literally paying banks to not make loans to their customers right. when they were telling everybody, oh my gosh, we got to watch out for this credit crunch and blah, blah, blah. So anyway, that's just a funny element of all this.
Yeah, no, it's funny. Like the history on this is just, it's very clear. And so now here we are. We're 2 weeks away from, you and I are recording this about a little bit more than 2 weeks away from the next FOMC meeting. Somebody I noted on Twitter today pointed out that like the Trump arraignment, sentencing, the FOMC meeting, and something else are all going to happen on the September 18th. Like, I wonder why all of these things are going to happen at the same time. Like it's written up like there's literally a Gantt chart. I make this point all the time. It's like literally a Gantt chart at Evil Corp Central, or Davos Central or whatever. And like, on this date we have to do all these things, and then we're going to push forward with the next phase of our operation. And like it's so very obvious to me. So, but so I guess the big question in everybody's mind is, what's the Fed going to do on September 18th? If we both agree that Powell wants to lower interest rates as little as possible, that he hasn't really changed his policy here, he's just acceding to reality, which is that yes, the labor market is weakening, yes, the credit market's weakening, yes, the commercial real estate bust is here, blah 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 blah. What's he want to do? What's he going to do? Like, in my mind, I think he's going to go 25, might go 50, but he'll reluctantly go 50. The market clearly wants him to do 75. What do you think he's going to do?
I'm leaning with you. I think, given his, druthers, he would want to just do 25, but he might do 50 in a sense of, because he thinks, if I just do 25, that's going to be, in other words, that's going to cause such panic that then I'm going to have to cut more anyway, because of people are so disappointed that I only did 20, you know what I mean? Like that kind of a deal. Right. So maybe he would do 50 just to, because he's going to think if I did 25, it's like going to be self-defeating. So that would be my guess. But yeah, I do think that at this point, and just to tie it in the earlier discussion, because I think what happens in practice, why is it the yield curve inverts, then it uninverts, then the recession hits? I think it's because the inversion is the tightening, and that's in a sense what, quote, causes the turnaround from the boom to the bust. But the Fed does see that coming with enough lead time, so they start cutting, and that's why the yield curve goes back to, quote, normal upward sloping before the recession officially begins. So I do think if that pattern is going to play out, yes, the Fed's going to have to start cutting, and then the recession this time around will, quote, officially start. So I do think that, rate cuts are coming, and it's just a question of when. And at this point, I think he does have enough where, even though, the CPI is still above the Fed's official ostensible target. Right. I mean, it's just kind of funny how, everyone was clamoring for cuts when, according to the official unemployment and the official CPI, it wasn't even close of a case for cutting. There, yeah. But I think that partly underscores how everybody kind of knows the official numbers are bogus.
Right.
So,
well, yeah. And on that point, as a matter of fact, I was literally just doing did an update on one of my I don't do a lot of data, but one of the data points that I do like to trot out is that since COVID, and that we're in a commodity cost push inflation environment, not in a demand pull environment, we're in a commodity cost push inflation environment, that the CPI really just moves with the wholesale price of gasoline here in the United States. And, I do a 4-month rolling average of the month over month change in the CPI and track it versus wholesale gasoline prices on a monthly closing basis, and it's like magic. Like, they just move in lockstep. That moves in lockstep with each other. The 4-month trailing CPI right now is 0.4% over the last 4 months. Gasoline prices today just got crushed below $2 a gallon. They're down 40 cents since the middle of last week. They were trading at 30 cents in the middle of last week. So there's not going to be any change in the direction of the CPI of inflation, because we haven't gotten a turn yet in gasoline prices, and we're not going to get that until after they try to get Queen Kamala coronated in 2 months. They're going to keep holding oil prices down and keep holding gasoline prices down. So yet another reason why Powell has the political or rhetorical cover now to actually cut rates, because trueflation, which is another means of, all sorts of different ways to calculate inflation. But if you just use a simple one, which is the 4 to 6 month trailing average of inflation, it's well below 2% annualized, and that works for them. So I don't know. That's what I see for coming into the end of the year, that we're not going to that inflation is going to come way down below, even official CPI is going to come way below 2% by the end of the year. Not on an annualized basis, but maybe on a 6 month basis.
Yeah, and so I don't have a problem with that. And again, I know reflexively a lot of people, probably like your fans and mine, would resist that because they have this idea that no, they're always just pumping in money. And I would say, no, it would be the other way around. Like, it would be concerning for you guys if you thought CPI did just keep going up at double-digit rates because they're not pumping money in, right? So if our whole shtick is these evil bankers or whatever, world order people are pumping in all this fake money that's not genuine, and that's what makes the dollar lose its value, well, then on the rare times when they aren't doing that, then you would expect it to stop. Like, that makes our story stronger to be able to say occasionally, no, actually right at this period, that's the case. The other thing too, I just popped in my head as far as these official indicators, it's also the SOM rule. I don't know if that's on your radar, of this Claudia SOM, SAHM.
I've heard of it, but just before you go I go into what that is, because I've heard of it, but I haven't looked at it.
Oh, okay. So, I mean, it wasn't on my radar until 7 months ago, but yeah, it's just a thing with the moving average, and when the unemployment rate rises by, I think it's more than 0.5 points over the previous, I forget how long, of the moving average, then that usually is a signal that a recession is imminent. And, given that thing, that's got a very good track record going back. And what was funny though is, so she's very progressive and, she hates Trump's guts and everything. And so that was officially triggered with the last unemployment report, because how the official rate bumped up a bit. And so that officially triggered it. And they were even trotting her out to say, no, this time is different. My rule is wrong. You know what I mean? Like, all the other leading indicator, it's not just the yield curve. It's not just all these other things flashing. There's a recession coming, and all of these, Krugman down the line. No. It's just Fox News. The economy's great. Don't listen to Fox News. You're wrong. You think prices are high at the grocery store? No, they're not. And now Kamala's saying they are higher, but it's because of corporate, concentration and market power. It's not because of anything the Biden administration did. So,
well, yeah. So 6 months ago, when they were blaming the Fed, I mean, I think a little over a year ago, I said, if you think you're sick of Elizabeth Warren now, just wait until we're 6 months out from the election, when she's screaming about price controls and corporate greed and all this stuff, and how the Federal Reserve needs to be disbanded and all the rest of it. And so 6 months ago, when they wanted to sell the idea that that they needed the Fed to cut rates in order to goose the economy into the election for their purposes. Oh no, the BLS is putting out bullshit statistics every week about the unemployment data, the labor data. And then they're having to quietly revise it all later on and everything. And now that we're 60 days away from the election, now, oh no, the economy's great and we solved inflation and we did all that. Meanwhile, I've literally looked at and watched a tripling of the volatility on a week-to-week basis of oil futures prices. They have volatility washed every small speck out of the oil market, by the way. I've talked to oil traders about this. I've talked to the ARB guys like Vince Lanci and others, and they're all saying the same thing. Dude, you think that you have no idea how bad it is. I've got friends that have been trading oil for 30 years, and they're like, we're not doing this anymore. Because somebody's clearly putting their thumb on the pulse of the market, and they're beating it with a hammer because they need oil prices down in order to get gasoline prices down, in order to be able to sell that they've tamed inflation and the economy's not so bad.
Yeah.
And it's all bullshit. And it's all going to reverse on November 6th, is my argument at this point. All the data is going to reverse.
Right. Yeah. So to make sure they get it. Yeah. It's a weird needle they have to thread where things have to be okay, because it's not, they're not running against Trump's economy right now. It's Kamala's running against Biden's ostensible economy, which is weird.
Right.
And so, yeah, things have to be okay for her to get in, but then to justify all the crazy stuff she wants to do, well, things have to be awful. We're on the verge of catastrophe here.
Exactly. Well, and this is what I said I said all year, I said Powell's not going to cut until the second half of the year because they're going to goose the economic data. They've got all this money sloshing around. GDP is not going to go negative. Joseph Wang pointed this out at the beginning of the year as well. And he said the same thing. He said, they're pumping all this money and they're running a $2 trillion deficit. There's all this money floating around. GDP is not going to go negative. We're not going to have a recession. So there's going to be no reason for Powell to cut rates. Just simply, he will have the rhetorical cover to not have to cut rates until the absolute last possible moment. And in January, I was literally saying, we get to July, it'll be great. We get to September, it'll be like Jubilee celebration. I mean, as of like 2 weeks ago, I was like, maybe he won't cut until November. It'll be even more awesome. But like, I hate to be that geeky about it, but I really have become this way. It's really funny.
Somewhat related to this too, just to to connect things with what I was pointing out. So for a while, guys like me were worrying about, hey, the inverted yield curve. There was a massive influx, all this monetary inflation after, COVID and so on. This isn't going to end well. And then it was like people, hey, it hasn't happened. Oh, looks like you achieved a soft landing. Everyone's congratulating for the soft landing. The data, like in terms of, if you just looked at the charts of the unemployment rate and the, and the increase in the CPI and so forth, that was eerily similar, like this last summer to the summer of 2007, right? Because it was a similar type of thing. Like the numbers were a bit different, but the pattern is certainly the very similar, such that back in April, I even said, because your recent statement there just triggered the memory. Back in April, when I did sort of like a, an economic update from my perspective, I said that even if Powell doesn't cut up through August, that's totally consistent with what happened back in the summer of 2007. Because back then they were still worried about like, record high oil prices and all things like that. So anyway, just to show the way that the people were saying we have a soft landing now, the fear mongers are just full of it. The data, all the stuff they're pointing to was also true in the summer of 2007. And so clearly it wasn't that at that point the Fed had managed to, take the gas off of their foot off the gas for the housing bubble and achieved a soft landing. No, we were in store for what at that time was the worst crisis since the Great Depression. So it wouldn't be surprising if a year from now people say, "Oh, this is the worst crisis at least since 2008."
Yeah, and we can, and I can take that one step further. I agree with you completely, Bob. I really do. And the bigger question now is, but at the same time, what I'm going to say is, and I want to just like broaden the perspective on this, is to go out into the world. The difference between here and then is between here and 2008 is the fact that we are no longer on an international standard for the pricing of international dollars. Like, this is the different world that we live in today. The world of SOFR versus the world of LIBOR are completely different and the Fed has different tools at its disposal and has shifted the means by which international dollars flow back into the American economy and whatnot, and interact with the Fed itself and all of its lending facilities. So to me, what I'm seeing now and what I've always thought was that this is a way to drain the excessive leverage overseas while shoring up the flow of domestic credit. Like, when I look at it this way, no longer can City of London or Frankfurt or Hong Kong or anybody else try to influence Fed policy through the offshore lending markets. They can if they want to, but Powell's like, yeah, but SOFR's fine. SOFR's not showing any stress. So whatever you guys are dealing with is your problem. And the banks here locally don't necessarily have to deal with that level of stress. And if they do, the Fed has literally come out and said, we want you to use the discount window. Have you noticed this? Right? That they literally, and I think they even put the rule in place that every bank in America has to go to the discount window, even if they don't need it, once a year, just to remove the stigma from it. Because they want the banks, they are encouraging the banks to say, look, we're serious about this. You're going to have to use the discount window because we have bigger fish to fry and they're out there. But we're here for you. And, however you're in, whatever you need to do. That's what the Bank Term Funding Program was about. It was a way of, okay, if you need emergency liquidity, you can pay the extra basis point, you can pay the premium, and you get the money that you need and fix your term risk, your term problem. But it was never it was never a stealth QE. If anything, it was even more QT because it was, they were buying loans from the Fed at 30 basis points over Fed funds. Like, that's what they had to do, right, in order to avoid the discount window. So I don't know. This is a different world than we had in 2008 from an international capital perspective, and then of course the way that the banks are organized now. So with that in mind, and with Basel III going into effect, and I know both the Fed and Wall Street are not happy with the Basel III rules at all, and with good reason. So have you looked into any of this? Do you have any comments on this? Do you want to chat about it? I mean,
so well, I guess I would just make the sort of generic point that another huge difference between 2007, 8, and now is just the level of debt that the Treasury has issued in the interim. Yeah. And so that's an issue too. And yeah, I think some of the, I don't know the specifics you have for Basel III, but I just know when I was looking at some of these things, it was like, oh, that's how they're going to just force institutions to carry more treasuries. Okay, that's one of the tricks they're going to be using. So yeah,
in what respect? By raising the capital requirements?
Yeah, I mean, it's been a while since I looked at it, so yeah,
sure.
Yes, I think that's what it was in terms of the different tiers and so forth, and that it looked like certain institutions, in order to still get the passing grade, we're going to in effect have to hold more treasuries than they would have otherwise.
Okay, yeah, I mean, and that is a very good point, and it's an aspect of the whole quote unquote Basel III endgame. And we don't have to belabor this point, because if you're not comfortable talking about it, that's fine. I don't have a problem with moving on to something else. But the only other thing I'll say here is that if you listen to guys like Jamie Dimon and others scream about the capital rules that are being put in effect and how unfair they are clearly designed to hamper Wall Street at the expense of making the European banks more attractive. And so this is a classic. Again, this is a classic thing, and Yellen's all behind this, and the Biden administration is all behind it, and yet the Fed and Wall Street are against it, and it continues to highlight that split between these two institutions, or in effect, which is, I can't see any air between the Biden administration and the Treasury as run by Janet Yellen and the freaking ECB, and and this is the point. And I think this is what Dimon has bitterly complained about, and he's not wrong about this. That why should we be holding 30% more reserves on our balance sheet than ING or Barclays or whomever, right? Like why do we have to do this? We're not the problem. They're in far worse shape than we are.
Yeah, I definitely agree with the general sentiment there, that I know I've seen discussions of like the culture of the BIS and things like that, where it's sort of like they look down their noses at if a central banker comes from a country and you can tell like they're patriots and they actually care about their people and their country. Like, it's like, oh, that's so, I don't know what, crude or whatever, primitive.
Provincial.
Like, yes, that's a good word. Whereas no, we're all, we're planning the global financial system here, and you got to, take one for the team and that sort of thing. So I do think that, yes, there is that element that's, and it's well known that there's a US UK sort of alliance of a certain group of people making decisions that the respective peoples of the two countries would not be on board with. But hey, we got to do this because, the adults are in the room and we got to make some decisions for the global order.
Yeah, well, or more appropriately for City of London. It's funny. I don't know if you had a chance to. I probably haven't. My friend Alex and the Alex Craner and and just did a podcast the other day about this. And Alex has done some unbelievable work trying to figure out just who is really vulnerable to what's going on overseas. So like the geopolitics and the war and all this other stuff. And it's clearly, as always, all roads lead back to London. That London is and the Bank of England in particular is particularly vulnerable to Ukraine's default and to these other things. And I don't want to go into this for a long period of time. I just want to bring it up that, when you hear people screaming, oh, the Fed needs to cut 100 basis points tomorrow, or Citigroup comes out, some junior analyst at Citigroup comes out, the Fed's going to cut 200 basis points in September. Yeah, that was before Trump survived, for example. Right. But they were planning on forcing the Fed to cut 200 basis points coming into the election because they're about to go busto. And the thing here that we're talking about when we talk about the domestic, we talk about the domestic stuff, which is great, but there's the international part of this is really freaking important, because at a certain point, we may avoid the worst of the credit crunch here in the United States, brought about by 5.5% interest rates and the breaking of commercial real estate. If there's a full-blown debt crisis on the other side of the pond, and we're now mostly immunized from it, thanks to SOFR and thanks to the way the Fed has walled off certain and in effect rewarded American banks for not taking European debt as repo collateral, and forcing those repos through the Fed and not through JP Morgan or Goldman Sachs or whomever. So if you want to speak on that at all, or if you even considered that, or what you think about any of that.
I mean, well, certainly the Ukraine thing, again, not that I have enough specifics to speak too responsibly on it, but yeah, I have wondered if part of, like, it's not merely a military issue, that when you've pumped in that many billions of dollars at some point, it's like, we have to make sure that our people, win that coalition. Otherwise, that's that's a financial issue that's at stake here at this point. So,
right.
Yeah, I think there is that element. I have back, this is a bit simplistic, but one thing
Sure.
I would say to people is that, look, the .com, going back to the .com thing, like that would have been, the NASDAQ going down, or where, okay, they bailed, printed money, bailed that out. Then there was the housing boom and bust. At that point, it was household name financial institutions that were on the line. Either some of them did fall and some survived in 2007, 2008. And then I thought the next thing was going to be major governments were going to be, the next crisis, and that the Fed was going to implicitly bail them out. And then I thought the next stage would be the dollar. So I do agree. I think that the U.S. is not going to be Armageddon, Mad Max with this next upcoming thing, because I think they're one stage removed, that it's going to hit Europe first, and that the Fed's probably going to selectively pick winners and losers, and let some people wither and rescue others. But then, at some point, I think it does come down to the dollar itself is going to be on the referendum.
Well, no, I agree with you completely. Don't get me wrong. I haven't broken with my Austrian brethren. The dollar is in serious friggin' trouble here. But in the short term, it's the best. It's the best looking.
Right.
It's still and as Brent Johnson likes to point out, there's still all this dollar denominated debt out there, foreign denominated debt, that there's just the demand for dollars is just still high. It may be lower than it was. Fine, no problem. I'm not arguing that point. But at a certain point, you have to ask yourself, who's got the collateral for more debt issuance, who doesn't, and and who's got any friends left. And when I look around the room, I'm like, yeah, Europe doesn't have any friends left, unless they make nice with the Americans, and that means that they're either going to do what we tell them to do, or if they continue to act like they think the European Union is going to determine for us what the First Amendment means, what the Second Amendment means, what the 10th Amendment means, and what our monetary policy is going to be. Well, I got news for you, Chrissy. That's no, you're not going to have enough money left over at the end to buy another neck scarf. It's just not going to happen,
right?
Because fuck you, we don't need to. Yeah. We're America. We don't need to. We own we have everything we need. We don't need Europe anymore. And this is one of those things that I we don't. We can retrench and come back, and so we can start the process of the world breaking up into economic blocks again. And then when you start thinking of it in those terms, Europe is clearly, dead man walking. Yeah. And then the bigger question is, are they going to allow us to escape this, this fate that they have laid out for us? And as again, the Gantt chart at Evil Corp Central.
Right.
That's kind of the way I think.
I don't know if this resonates with you. I think part of what's going on is that because Americans, and I include myself in this, are so ignorant of the rest of the world, that even Americans who are very critical of their own government and their own central bank tend to just think, well, no, I'm just looking at them and I see how stupid and incompetent or irresponsible, reckless they are. And then that means it must be curtains for the dollar and U.S. prestige, 5 years from now. And that's probably right, because you're ignoring, like you're saying, how bad Europe is. And I think this kind of happened with, not to pick on him, but like Peter Schiff, his predictions about what was going to happen with the housing market and all that stuff, like from 2006, 2007, were just so spot on. Absolutely. And yet I think, he thought the dollar was going to crash in the near, shortly, and not realizing that, or fully appreciating that, well, no, even though everything you said is going to come true, precisely because of that crisis, everyone's going to rush to the dollar, because, that's just a natural inclination for people around the world. Hence, paradoxically, a situation that the U.S. authorities certainly contributed to then led to the dollar strengthening, at least during that panic period. So I do think that Austro-libertarian types, especially if they're Americans, tend to miss that element sometimes.
Well, and they do, and and it was a hard one for me as well. I'll be honest with you. I remember fighting Martin Armstrong's arguments about global capital flow for years. I mean, I was at Newsmax for 2 years, or a year and a half, before I finally like I'm wrong about everything. Like it's not working. What's going on here? And it finally had to sit with it and go, it's not about the dollar. The euro is not going to replace the dollar unless somebody's actively trying to destroy the dollar and pump up the euro, right? And that was maybe the case during the aughts and in the early parts of QE, but today that is clearly not the case. And I've always kind of said, well, just think of it in terms of market share. If the market leader, in this case, the United States and the U.S. dollar and the Federal Reserve, have still 60%, 59.8% or whatever of global reserves, and there's how many trillions of dollars of dollar-denominated debt owed by foreign corporates. If they assert their market dominance in any way, they use that market share to their advantage, the world has to listen to it. Period. Like, it's not a free market. I mean, it is a free market in some respects, but the world has to listen to it until they finally decide, okay, I don't want to work with you guys anymore. So, and that's also fair. And, as Americans, we can get upset about the way our own country has been effectively betrayed, but that's not the end of the analysis. That's the world that's arguing the world we want versus the world we've got. Right. So.
Yeah. So is it fair to say that your point is that, yes, there's a major realignment coming, but it's rather than it just being China and Russia and India kind of assuming center stage, it's more that Europe is going to shrivel and that then the other two remaining powers are going to more fill the gap, and that doesn't translate into a U.S. collapse, the next 10
It doesn't
years.
translate into I don't think it translates. Yeah, that would be mostly fair. What I'm saying is that the United States has the opportunity to muddle our way out of it if we want to, right? If we're going to allow ourselves to do so, and politically, are we going to be able to do so, right? And that's the big thing. It's the same problem with look at what happened in the German elections yesterday or the day before, which is that Saxony and Thuringia go to the polls. 60% of the people vote center right or far, quote unquote, far right, and yet that's not the governments that they're going to get. They're going to get cobbled together left wing communist governments, right? And because that's what is on the Gantt chart at Evil Corp Central. Well, the same thing is kind of happening here in the United States. Even if Trump wins the election, do you think anybody's going to accept that result when you've got the Democrats literally screaming that they will not accept the results regardless of what happens? Of course not. So then my point is that we have the opportunity, we have the capital, we have the infrastructure, we have the collateral, we have everything, we have the people, we have the capital base. The question is are we going to be allowed to express that, or are we being in effect liquidated and through political machinations? And this is where we get back into I've started to liken this to the kind of classic Austro-libertarian take on the war between the states, or Lincoln's war to prevent Southern, Lincoln's war to prevent Southern secession, or what we in the South call the recent unpleasantness. And and I remember reading Tom DiLorenzo's the Real Lincoln and getting it, and I seeing the Civil War from that perspective, and my heart is still with the South, like philosophically, emotionally, and everything else. But I also know that was also the first time the U.S. was attempted to be color revolution by the British, because the British and the French were literally egging the South on to secede and to create a division between North and South, similar to what they're doing between Ukrainians and Russians today, and similar to what they're doing between wokenistas and MAGA-tards. And you can see it. You can see that dead hand of that globalist impulse of continental Europe. And the way I like to describe it is that these are just the old colonialist impulse of continental Europe rearing its ugly head again in various shapes and forms. And so, and when I start to map the world that way, then people like the Federal Reserve and the Wall Street and they just become players at the table. They become almost lieutenants to the real fight that's happening around the world. And this is part of the reason why I don't do a lot of data work anymore, because to me it's all personnel and and policy level, because we live in politicized markets. We don't live in real markets. We know this, but the markets every once in a while, are allowed to operate within these frameworks that they allow the markets to operate in. And then we see free market principles, run, perfectly predictably. And then we all talk about, oh, well, the inverted yield curve means this. But really, part of it is all just kind of very fake and gay, to be blunt about it. But at the same time, do I think that there's an opportunity for people to really to break out of that system? Absolutely, I do. And I have to believe that. Otherwise, then, I'm stacking sardines and 30-06, like, you know what I mean?
Yeah.
So
I'm just curious. I don't know if you saw something that caught my eye was that, they've been openly talking about arresting Elon Musk at this point. Like Kamala Harris was, she didn't literally say lock him, but she was like, no, he's, he can't be doing different rules on Twitter. And I think she said he's lost his privileges. Like he's, her son, and she's going to put him in timeout or something. Right. And that, and the Telegram guy and everything. And then I saw Elon, like, and the Guardian, apparently I saw someone say this, I didn't go verify, but saying this is 3 articles in the last 2 weeks from the Guardian talking about openly that he should be arrested, Elon Musk. And he tweeted and like praised, it seemed like it was out of left field, praising Javier Milei. And then Milei, it was his account saying, yes, Elon, thank you for the support and blah, blah, blah. And I wondered, like, if Elon himself is realizing, like, I need to start setting up a sanctuary. Like, I may have to leave the country, and depending on how things go. Like, it really does seem like there's like 100 major players in the world right now, and they're all forming alliances and seeing how this is going to play out.
Musk is a very interesting problem, right? Because he represents he represents a lot of things, and I chatted with people about the big tech versus little tech, right? So big tech being Google and Microsoft and those guys, versus little tech, and then the PayPal mafia and Elon Musk and a few others. And I find it also interesting, like Larry Ellison just bought Paramount, right? The studio. Like there's a shift happening culturally. There's a shift happening where certain institutions are being taken back over again, and we're at the cusp of that kind of turn against this radical. I guess the best way of putting it is this radical managerialism, right? I've been starting to finally read James Burnham's The Managerial Revolution. I don't know if you've ever read it.
I haven't read it.
Yeah, I would actually really recommend it, because I think it kind of transcends the whole capitalism versus communism argument. And we may actually be dealing with it's just basically technocracy, right? Burnham doesn't describe it that way, but in the modern parlance, we can see it as technocracy, and that these technocrats are all just sitting there going, look, we're in charge, we're running things, we control the levers of the control of the flow of capital and the controls and control the structure of production. Like, what are you going to do about it? And they literally are thumbing our nose at it. And then anybody who decides to poke and try and grab any kind of sovereignty on particular important institutions that maintain that level of control. In this case, it would be the media, in the case of Elon Musk, and space and communications and all of this stuff. Yeah, that's something that he's a real threat to them.
Right. Yeah. I mean, just with your, Evil Corp or whatever the name of your company.
Evil Corp Central. Like,
yes. That, if you're just looking at the board and you're saying, the fact that right now there's relative freedom of speech on Twitter, and if people want to get our perspective out, and you got Joe Rogan and there's other guys that are coming, that people can be heard and voice opinions that we could, before we could just turn off, either literally or there's the hits of their reputation, whatever, would be so severe that everyone would just know you don't talk about those things. And now, so what would you do? Well, we got to just take that guy out. You know what I mean? And so, and I would have thought they would have to be more subtle about it, but no, they just arrest the one guy and, openly talking about, well, if Elon doesn't comply, we'll have to arrest him. I mean, what else would we do here? So anyway, just like with Snowden and Assange, that it really is just that, to me, that naked, where they're just looking and saying, no, it absolutely cannot be the case. Like, that's our Achilles heel right now. We're basically, we're in charge of the schools, the major conventional media and stuff like that. But there's this pesky online way of distributing information, and we need to nip that in the bud, because this is really hurting our narrative control.
I agreed completely. And it is very important. And they are in the mask off phase. And I think that I think my partner Dexter White has described this as, going for the boob too early on prom night during COVID for the full authoritarian lockdown. You'll own nothing and like it, move into 15-minute cities, eat bugs, all the rest of it. And I think that, humanity just went, no. Like, I'm sorry. Yeah. We're not particularly organized about the no at this point, but we're still like, nah. We're not doing that. And then everything since then has just been a series of rearguard actions on their part to try and maintain whatever they have, and then try and shoehorn in their quote unquote revolution in the time frame that they have, which has come down to these next 3 to 6 months, because if they've lost so many of their people in Congress. Leahy's gone, Feinstein's gone, Steny Hoyer's going to go, Mitch McConnell's could stroke out at any moment, Joe Biden is too old. Like, all this, Pelosi's 84? Come on. Like, these people are all at that point where the people that they own and that they've used to build and maintain the system, they've run out of time. Like, the clock does run out on you. And eventually, you do, it isn't one more day above the roses for them. And so, like, that's been my, it's kind of been my argument for a long time now. Like, they have a very limited time frame to get this thing finished, and if they don't finish it within this time frame, the whole thing falls apart. And if anybody just decides to just poke it a little bit and go, you know what, we're not going to do that, the whole thing collapses, because it's a very brittle system. I think. I mean, it looks so much more powerful than it is, but I don't know. I don't know what you think about that, because that's the way I see it.
Yeah, I don't disagree with you as far as the time frame. I definitely, this is some of the people I talk to behind the scenes, and we all agree on what the end game is from their point of view, and we just might disagree about the speed at which events are going to unfold. But certainly, if you had asked me back in March, is there going to be an assassination attempt on Trump, that it's going to be so clear that the Secret Service guarding him was so either they landed or let it happen, or was just so incredible, but it would get dropped out of the news cycle a few weeks after, and that they're going to swap Biden out and put in Kamala Harris and nobody's going to care. Like, I would have just thought, well, that's going to be tough to pull off, but no, they did it. And so, at this point you can't, rule out anything. So I definitely agree with that. The other thing too, that I think there's this idea that people have that they ascribe too much power to the people, quote, in charge. And like to think that, oh no, if you have the ability just to throw people in jail, or if they speak out, then you can do whatever you want. And it's the other way around. Like, in a regime like North Korea or whatever, there's where they have the tightest control over the media and the schools. And if somebody spray paints, dissident stuff, they clear it off right away. Even though, that guy, he could have your whole family killed if he wanted to, and, he would have the ability to do that. So it's because in that sort of, system of complete control, that's where they really have to make sure they maintain the narrative, So the point being, this goes back, Mises liked this idea going back, David Hume and Etienne Lebede, about the governments rest on public support or public opinion. Even awful regimes, there is a sense in which, it's a tacit consent, or maybe just resigned, like, well, what else could we replace it with? But still, like, if, the guy in charge, if he tells soldiers, hey, go shoot them because they're revolting, the soldiers have to obey. At some point, they can just say no. And, and that does happen occasionally. And the people that know that the most are the rulers. They recognize, when I go to sleep at night, if the army turns against me, I'm done, and so that's kind of an interesting thing.
Yeah. And it's also, it also then creates a predictable framework for what their range of action is going to be when they encounter any kind of, real dissonance. right? They're going to come down as hard as possible. Again, I use it all the time, which is that moment in V for Vendetta when John Hurt's screaming, spitting into the screen and saying, "We have to remind them why they need us," and then they go on the big media campaign, and it doesn't work. Right. And at some point, the family that we're watching throughout the entire movie, the old man just sits there listening to all this stuff, just looks around and goes, bollocks. And, and then his granddaughter gets freaking killed by a fingerman, and the whole society explodes. Like, well, that's a dramatic, move, Hollywood version of, screenwriter's version of, I hate to use the word Hollywood, but screenwriter's way of highlighting the series of events. But it is really similar to that. I mean, some of what's going on in Germany, what's going on in the UK to a lesser extent, like the voting patterns and the changes that are happening are because of very similar events to what we saw there. Like, the 18 young girl gets raped by a bunch of migrants or raped and killed, and a bunch of Germans are like, that's it, I'm done, that's enough. And the East Germans are like, we're not doing this anymore. We lived under the Stasi. We're not doing it again. They have to lead. They have to lead. And so it is a very interesting moment. Like, the more authoritarian they get, well, you and I said, maybe we'll talk about Star Wars today. This just goes back to Princess Leia, right? The more you tighten your grip, Tarkin, the more star systems will slip through your fingers, right? So,
right.
While we were chatting about what we were going to chat about today, Bob invoked Star Wars. I'm like, oh, cool. We'll talk about Star Wars. I'll talk about anything.
Just to tie it back, there was something that was interesting about Twitter specifically, or X as they try to rebrand it, is the element of, again, this issue of like what's called common knowledge, like the way economists study this stuff. And it's like, it's one thing if, 10 million people really don't like Kamala Harris, let's say, like they really despise her, think she's a phony. It's something else if like you're one of those people and that 10 million other people agree with you. But it's even next level if you all know that you all know. Right. And so that's the kind of thing where, so if somebody does like like I saw there was a thing, I don't know if you caught it, I forget who it was, but there was some official, I think in the German government, and she's clearly, she's morbidly obese, and somebody's being prosecuted online for calling her fat.
Right.
And, and so, but part of what's going on there is like, it's not just like, oh, that's that is crazy and whatever, but also beyond that, like they can't have the public mocking these people. Like, no, they're very serious people and they're in charge, and you could disagree with them and then you can take it up and you can vote next time but to just sit there and mock them as these people are clowns, where like they really need to stamp that out. I think that's partly why, like Elon Musk, I don't trust that guy as far as I can throw him, just to be clear. But I'm just saying that, his irreverence and the fact that he just does like dumb frat boy jokes or something occasionally, I think in their same thing, like why they can't stand Trump is because he just, he does the effect of like, the equivalent of pulling their pants down or something. It's like, you can't do that,
Yes.
And so
again, go back to V for Vendetta when what happens to Stephen Fry's character. He runs a Benny Hill skit, based on, and that winds him up in getting black bagged, right? And it says, I don't know if you saw the latest thing that Musk did. He said, there's a tweet of a picture of his new of his private jet. And it's like, do you like the new paint job? And it's all in black and it says GFY on the front of it.
Oh, no, I didn't see that one.
I'm like, you know what, dude? You go, you be you at this point. That's freaking awesome. That's like, it's we played around with the phrase a while ago, become ungovernable, right? And tried to seed that into the zeitgeist. And I think we were mostly successful at it. And I'm watching it happen everywhere. And it's kind of hilarious, actually, on the to see it happen from Elon Musk. And then once Musk does it, then everybody's going to do it. And it's and yes, and it's the same thing with Donald Trump. Like, he just like makes fun of all of them. And, and it doesn't matter whether Trump's a Democrat or not a Democrat. It doesn't matter whether, it doesn't matter whether he's going to fix everything or not fix everything. What matters is that they hate him. And that's all that really matters. And they hate Musk. So that means he's clearly doing something that they don't want him to do. Whether it's, real, whether we see it or we don't see it, is irrelevant. They hate him. Therefore, for right now, we should like him. Same thing with Powell. They hate Powell. because Powell refuses to, print $30 trillion for climate change, which is another way of saying to print $30 trillion to bail out their unfunded liabilities in Europe. It's that simple. It's not tough. So
yeah, and as you say, another big difference between him and Yellen, where she was on board with all of that kind of stuff and whatever, maybe say, well, the Fed has to have independent but went back when she was the chair, but certainly endorsing the spirit of all of this stuff. Whereas, Powell is just, again, not coming from academia and everything, just, a different type of person, and certainly not like in the club of that group of people. Like he's coming from a different, just like with Trump, that, I'm sure runs in, certain circles or whatever that you and I would be not endorse the worldviews of all those people, but it's not the same group of people that the Bushes and the Clintons came from. It's just a different group. And that's partly why it didn't work when he came in. They realized like, oh no, this guy's not a team player, and he's not going to work with us on this one.
It's funny. I every once in a while when I pop through YouTube, and I use YouTube as a entertainment device almost completely. I don't actually use it to like learn anything new. But every once in a while, like the short of Dave Chappelle pops up of him talking about why everybody voted for Trump, and it's because he came out and he said he broke the fourth wall, and he said it's because I used to be one of them. I know the system is rigged because I use it, right? That more than anything else, I think is the thing that they hate more than anything else is, Trump knows where the bodies are buried. He knows what they do and how they operate. And, he's telling them no. It's the same thing in many ways, it's the same thing with RFK Jr. Like, and watching that, and I'll be honest with you, even if they don't win, or even if they're not allowed to win and Harris is coronated, because it's not going to be elected, please. It doesn't matter. What matters is that everybody knows at this point that this is a rigged system. And you said earlier, the thing you said earlier is, if you don't like the fact that she's fat, and that's fine, you can vote, you can express your dissatisfaction by voting. Well, then they do everything imaginable to queer the vote and make sure your vote doesn't count. Like, really? Okay. Like, why don't you just say you don't have any rights? You're not people. You're just ants to us, and we don't care. And you're just tax cows. And that's fine. If that's what, just admit it and stop lying about it. And then we can all get on with the business of going, oh yeah, we're tax cows. Now, so that means that when we see you in the street, don't ever come into the street. Just don't. Right. Okay. Right. So you want to treat us that way, don't come into the street. We'll leave your Amazon purchases at the gate for your man to pick up. Because if you actually show up at the gate, you ain't ever going to walk back into the castle, because that's where we are. If they know that if they actually admit that, then it becomes a different game.
Yeah. And unfortunately, like you say, with them, charting it all out or something, it's certainly not pretty. And it goes back to, somebody reminded me about how, remember the Department of Homeland Security bought all those billions of rounds of ammunition a while ago, and everyone at the time was freaking out, and they had certain like Republican congressmen asking them, "What are you using that for?" And then it was a big deal, and then we kind of forgot. It's like in I don't know if you're how long ago you've read Animal Farm, but there was a thing where the pigs are kind of taking over there, and then there's these young puppies, and then they send them away, and you kind of forget about them as a reader, and then they come back and they're vicious dogs, and then that's how the pigs really up the ante on their level of control. And I think there's lots of stuff like that. At the time it was a little bit disconcerting, and then you kind of forgot about it, and then oh yeah, no, they didn't forget about it. They did that for a reason. And
yep. No, first you create an ammo shortage by buying up all the ammunition. Then and if you're under Obama, then you forcibly close to the EPA all the lead smelters in the country.
Oh, that wasn't even on my radar. Okay. Yeah.
Oh yeah. No, they did that. That was ages ago. Like that's a decade ago, dude. Are you kidding? Like I think there's one or two. I don't know if any things, but I remember when there was a big deal. Like the last lead smelter in the United States, or I'm sure that there's other lead production in the United States, but during the Obama administration, so I think it was somewhere around 2013 or 2014. Like, and then they bought all the ammunition. Then they put import restrictions on foreign ammo and blah, 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 and like foreign guns and like all this stuff, and forcibly raising the price of guns. And it's typical. Obama did all this stuff well before Trump, and he's been continuing to do it through, control of the alphabet agencies. And, we've had Obama in power for 16 years. I don't even consider Trump, in charge of his own presidency. Like this is the moment. So we'll see what happens.
Yeah. And what's funny is, like, for people, I know your audience is probably very attuned to this stuff, but for people, as we're talking like this, I had this idea that people from 15 years ago, this would sound like crazy talk. And yet it's like, no, we have text messages from the FBI agents admitting we're not going to let Trump win, that kind of, right. You know what I mean? And it's like, okay, Inspector General reports about how with the, FISA court requests, how, they probably should have disclosed that the CIA told them that this guy was with them and they didn't. So, how about that?
Yeah, so, we've proven beyond a shadow of a doubt that, that Obama literally used the FISA courts to spy on Trump, and everybody went, oh, that's nice.
Yeah.
Whatever. Yeah, whatever. Like, are you kidding me? Like, Obama should be in jail. Like,
right.
No,
right. And
they,
like I said, like the Inspector General report after the fact, basically, it's all in there. You know what I mean? It's right. You don't have to read between the lines. They openly admit, and it's like, but it's true. Like the New York Times story about the IG report didn't say confirmed Trump was right. That's not how they spun it.
Right. It was funny. It's like recently, it was like the latest report that yes, the Biden administration Joe Biden is guilty of doing influence peddling in Ukraine, but now he's too old to do anything about it. I'm like, is that their way of saying that Joe Biden is actually just dead? And that he's not even really alive anymore. Like, is this your dog whistle to us that we don't even have a fucking president at this point? No, okay, fine. Not that it matters. Like, we've had a mushroom sporifying in the White House for 3.5 years. Who gives a shit? Like, who could tell that we don't have a president?
Right.
So, it's just ridiculous. All right. Oh well, Bob, this has been fun.
Yeah.
We'll do it again. And we'll chat about something else the next time. We'll probably chat about most of the same shit, except we'll lead off with interest rates, and we'll go from there. So tell everybody where they can find you and what you do and all that happy
sure
jazz.
Thing. Yeah,
we'll do the thing.
Yep. So I host a podcast for the Mises Institute called the Human Action Podcast. If you go to Mises.org, you can find that there. I'm the chief economist at Infineo, a company we're putting a lot of financial assets on the blockchain. That's at Infineo.ai. And if you go to bobmurphyshow.com, that's my personal podcast.
Cool. All right. Excellent. So, and where can people find you on X or Twitter?
Oh, I am Bob Murphy Econ there.
Cool. Excellent. So Bob and I follow each other. I think I finally followed you on Twitter the other day, so we should be able to deal with this. And when this podcast comes out, everybody go ahead and give Bob a follow. He is hilarious on Twitter, actually, without being mean like I am. So with that said, Bob, enjoy, and we'll talk again soon.
Yeah, it was a pleasure, Tom. See you at the Mises event in a few weeks.
Appreciate it. Well, that'll about wrap it up for episode 192 of the Gold, Goats, and Guns podcast. I want to thank Bob Murphy for being my guest today and sharing his thoughts and insights with the world about the world. I think it was I enjoyed it as always. So with that said, you can follow my work over at my blog at tomluongo.me or goldgoatsandguns.com. You can follow me on Twitter at TFL1728, and you can sign up for the Patreon at patreon.com/goldgoatsandguns, where we do our twice weekly market reports, which is basically video podcasts and talking over slides with technical analysis of important markets like gold, silver, Bitcoin, the Dow, and others, as well as the monthly Gold, Goats, and Guns investment newsletter, where we wrap all of this stuff that we're talking about into original material looking ahead at the future, as well as having a coherent portfolio strategy to help you make sense of all of this and try and survive it, if not actually thrive. So with that said, I'm out. You guys be well. Take care. We'll talk soon. And keep your stick on the ice.